This is Shah. Right now we are looking at EURUSD, and this chart is becoming very important because on the weekly time frame, price is still respecting a bullish Fibonacci structure, while on the daily time frame we are seeing compression between trend line resistance and rising support. This means a big move is preparing, and the next breakout can decide the higher time frame direction. The reason I am covering this pair is because the weekly Fibonacci levels are still holding perfectly, and investors along with swing traders need to understand where the real value zones are instead of chasing emotional entries. So the question is, does EURUSD break the trend line and continue bullish, or does it sweep liquidity before the next move? Let's quickly recap what has been happening. Previously, EURUSD formed a major swing low near 1.015. And from there, the market started a strong bullish expansion all the way toward 1.207. That move created a strong weekly bullish structure with higher highs and higher lows. Now looking at the weekly Fibonacci retracement, the most important OTE and investor entry zones sit around 1.111 and 1.088. These are the 0.5 and 0.618 levels, which historically act as institutional accumulation zones during bullish trends. Price already respected these levels perfectly and continued higher, which confirms buyers are still active on the higher time frame. Now moving to the daily time frame, we can see price currently trading near 1.174 while compressing inside a triangle structure. There is descending trend line resistance above current price and rising support below it. This means the market is storing liquidity before expansion. The immediate resistance sits near 1.180, and above that the major liquidity target remains around 1.207, which is the weekly swing high. If price breaks above the trend line with strong daily closes, then liquidity above the highs becomes the next objective. On the downside, support remains around 1.140, which is the previous swing support on the daily time frame. If this level breaks, then the market can retrace deeper toward the weekly OT levels again. From a market structure point of view, the weekly time frame remains bullish because the higher low structure is still intact. The daily time frame is currently consolidating inside compression, and usually these structures lead into aggressive expansion moves. Now let's talk about what investors and swing traders should actually do, because this is where strategy matters. For investors, the best approach is patience. Chasing price near resistance is not smart because risk becomes high. The ideal strategy is waiting for pullbacks toward value zones, especially around 1.140 or deeper weekly Fibonacci areas if the market retraces. For swing traders, the focus should be on confirmation. If EURUSD breaks the trend line with strong daily candles and closes above resistance, then momentum trades toward 1.207 become attractive. But if price rejects from resistance and loses daily support, then short-term downside liquidity sweeps become likely before continuation. Now let's bring in liquidity, because this is where the market usually traps traders. Liquidity currently sits above the trend line highs and also below recent daily lows. That means both sides can get swept before the real move confirms. The strategy is simple. Investors should focus on weekly value zones, while swing traders should wait for daily confirmation and avoid emotional entries inside compression. Invalidation is clear. A weekly breakdown below the higher low structure weakens the bullish setup and opens the door for deeper retracement. Right now, EURUSD is sitting between higher time frame bullish structure and lower time frame breakout pressure, and the next move can be explosive. Join shah.com for free signals. Let me know which coin you want me to cover next.